In today's video, I'm going to teach you how to accurately log and manage your new asset purchases in your accounting software. It's crucial to keep your financial records precise, especially when acquiring new assets, as this influences depreciation records and impacts your overall financial picture. So, let's get started with the process. To begin, open your accounting software and navigate to the section for journal entries or your asset accounts, depending on the software you're using. This is where you'll input the details of your new asset purchase. It's important to have all your purchase documents handy, such as invoices or receipts, to ensure accuracy. When entering a new journal entry or asset account, make sure to input all relevant details such as the date of purchase, the total cost of the asset, and any additional charges like taxes or shipping fees. Accurate data entry at this stage ensures that your financial records remain dependable and provides a clear picture of your financial position. Missteps here can lead to discrepancies down the line, which can be complicated to rectify, so take your time to verify each detail. After you've recorded the purchase, it's essential to track the depreciation of the asset separately. Depreciation reflects the wear and tear of an asset over time, which is important for understanding its current value and future worth. You'll need to determine the method of depreciation that suits your asset type best. Common methods include straight line and declining balance. Each has its way of spreading the cost of the asset over its useful life. For those unfamiliar, the straight line method is straightforward, depreciating the asset evenly across its lifespan, while the declining balance method accelerates depreciation in the earlier years. Once you've selected your depreciation method, make separate entries in your accounting software to document this depreciation. Some software options might have specific fields for depreciation, simplifying the process, while others might require manual calculations. Keeping depreciation separate is crucial because it allows you to track how the asset's value diminishes over time, helping with future budgeting and asset management. It's also worth consulting with a financial advisor or accountant if you're ever in doubt, especially when handling significant purchases or high-value assets. They can provide insights tailored to your specific situation and ensure compliance with relevant regulations or accounting standards. That's it for today's walkthrough. By following these steps, you can ensure that your asset management within your accounting software is both efficient and precise. Accurate asset tracking not only helps you keep a sound financial footing, but also empowers you to make better informed decisions for your business. Thank you for watching, and be sure to check out our other